Dear friends of Volumetric Trading, good morning from Eduardo Buratini and welcome to this analysis video. S&P wink with tongue sticking out 500 and Nasdaq for September 9th. Let's start with the S&P wink with tongue sticking out 500, where we can basically say that yesterday was a day without any particular events, without any significant movements of note. It was basically a day spent within a range, a day where the price stayed confined inside a range, not even a wide one, actually quite compressed. In short, for the RTH session, we stayed around 20 points. Pretty low, so overall, definitely a balanced day and not very interesting in terms of volatility. But it's a balance that makes sense. It really does make a lot of sense, because it's a balance that's forming as a continuation of what was, let's say, the leg down that happened on Friday, a session that was marked by increasing volatility and also saw a full retracement in between. An interesting move after coming back to retest and precisely respect, down to the millimeter, what was the weekly VWAP. So, in short, we can definitely say that as well. Let's say this really helps to qualify what happened and what the significance of those levels in this area might have been. At least 6,450, at the very least, also because 6,450 isn't that far from 6,460. That famous level that, for more than a week, actually for several weeks and more than one session. So, as we've seen, it's about building increasingly important support levels. And in this case, 6,450 was no exception either. Especially if we consider how the price made this retracement. We can see here there's a volume profile specifically related to the leg down that was formed. And we can see that basically this profile has two main features. It has a distribution that's not very well defined, but still visible in the lower part, and it has a very prominent, very pronounced POC, which is also enclosed by a value area with a Gaussian shape. This is also very pronounced, but with a low thickness, so a small width. So the POC is definitely a POC that has remained unbalanced, and everything in between. We have an area of relative emptiness, obviously, relative emptiness. It's a term I use on purpose because it's not actually empty. It's not a no man's land, it's an area where we see that there has been some volume, obviously not a lot, but it's not an area that was outright rejected by default, because we see that the volume is neither too much nor too little, just the right amount, so to speak, okay. It simply hasn't yet created its own distributive context. But that's exactly what the price would lead us to think. If we have a sideways price movement, in balance, consolidating in this area, that's actually a sign that the price is very likely starting to create distribution. And therefore, acceptance, with the prospect of revisiting and thus rebalancing this whole area a bit. And obviously, then, this would mean a fairly significant signal of recovery, at least to some extent. Here's the upper part of this swing, which, by the way, saw the creation of a new high right at 6,540, even 6,542. So this basically means that, since the price, beyond that retracement, had a low at 6,490 in yesterday's session, which in fact not only marked the rejection once it was accepted in the 6,500 area, above 6,500, of returning below it, even though there was a slight dip of about 10 points. This is pretty irrelevant. if we look at it from a more medium-term perspective like this. And in doing so, it also failed to re-enter its previous acceptance area, as well as this very clearly visible Gaussian on the composite profile, which in fact has outlined what has been the most important distribution of all these past weeks. You see here, if we take a look, this was the area that basically marked the price limits for most of the sessions. And it also saw a decent amount of volume traded, so these are all clues that make us think of an essentially bullish S and AMP wink with tongue sticking out. This is also confirmed by the market profile, which has effectively left us with a bad high, okay, at the top part of yesterday's session. So what does this potentially mean? It's a lack of excess, so an unusual acceptance at what was still an extreme of the day. Now, the only element that's a bit of a downside is that, clearly, if the price comes back to these levels, if we assume it comes back to retest these higher levels, clearly, here it will encounter possible action and intention from the sellers. Because, look at all this volume that was created as the price was rejected. What does this mean? It can mean several things, but the most important is that it still indicates absorption, which is a variation. Let's say it's another form of absorption, a lot of volume. Thank you. So, a lot of participation, yes, they sold, but there were also many who were buying at the highs. There was a bit of a battle. In the end, most likely the sellers won, but there was still a strong fight in this area. So it's reasonable, absolutely reasonable, to consider this whole area, and even with a certain expansion, up to the 6,550 area, as a possible resistance. This is the more important resistance that we should pay attention to throughout today. Once this is surpassed, obviously we'll be creating new all-time highs. Of course, this is the scenario that is preferably expected for today. If, on the other hand, this scenario does not occur, we clearly need to watch out for a possible rejection below 6,500, because a possible rejection below 6,500. This is more likely to happen, maybe during the session change, so at the start or beginning of the US session. Probably, if we see a rejection within this area, then we'll have a price that moves back inside its range. So, let's say, within the main distribution range that we find immediately below, to see it once again trading between the levels of 6,500 and 6,460, 6,450. So this is the dynamic that should be mainly observed today. Let's take a look at the Nasdaq. On the Nasdaq, we have seen some additional small signals from an order flow perspective. Because from the point of view of order flow and volumetric tools, we can see that Friday's session left a fairly significant absorption signal, also highlighted by the pull analyzer, which immediately created a nice swing with some demand. So we can see that from this swing low, an upward acceleration movement started, which basically went back to retest what had previously been a high, this high. Surely some of you will remember that I mentioned this area in other videos and analyses. This was a rejection on an old bearish pressure that caused the price to retrace, again during Friday's session. And in fact, we've already come back to retest this high, this time without resistance, this time without resistance. From reaching this high at yesterday's close, we can see what happened. Then there was a pullback toward the lower part of the range, unlike the S&P wink with tongue sticking out, which instead showed relatively stronger performance. But this is just for the sake of discussion, because in the end it's pretty irrelevant. These are two markets with a very, very similar structure. Clearly, the Nasdaq. Thank you. What does it need? The area around 23,770. This zone is important because, as you can see, we have two significant structural levels. It's an area where, at yesterday's close, there was renewed absorption of sellers. So, potential support, this is evidence coming from a slightly smaller time frame, let's say from an intraday narrative perspective, not so much intra-week. So it should be taken into account anyway, especially because, even if it's a smaller signal, it aligns with a broader narrative that, well, we're already seeing. And obviously here, the interesting thing is that the market, already today, immediately accepted outside the last acceptance area. The previous one was below 23,650, and it really seems that in yesterday's session it had already accepted and distributed within an area lacking previous acceptance and distribution. But even here, we see there's a bit of a volume gap, so this could easily be the rebalancing of this area here, which could actually be, today, the precursor of a continuation of this distributive process, so it's not a given that it will lead the price to create new highs. Of having relentless strength, but even if the price remains trapped here. So, with confirmation of a positive bullish scenario from the S&P wink with tongue sticking out, the Nasdaq would follow as well. With the proper proportions, because we're still talking about a range between 23,800 and 23,920 to 930, which in terms of width is definitely significant, so certainly even here. The most likely scenario is to check for acceptance above 23,900, here the descending line. We have it slightly shifted a bit lower, because here we can only talk about a full confirmation of this scenario if we move back in. At least below 23,700, maybe even a bit lower, to see the price attack the previous distribution again. Obviously, all these analyses are intended purely for educational purposes, and this is not an invitation to take a position. I thank you in advance for your attention, wish you a good day and good trading.